G'day traders. Today we're going to be talking about the importance again of timing and price at the high and low of the day. Stay tuned, traders. We'll be right back. G'day traders. Stacy Burke from Stacy Burke Trading. Today, getting back on track, going to be talking about a couple of new things and just also prioritizing the importance of timing and price. And going to show two things today. One is that a couple of my recent posts, a lot of questions about my timing windows, but also we're going to talk about trap volume. So we're looking at the British pound. I want to go over some basic concepts. Not going to dive too deep in. I just want you to start to really pay attention. And we talked about this in some earlier videos, but hopefully this will clarify things a bit more. And that is, number one, the importance of the timing windows. So you'll notice I've changed my colorings of the video on the videos on the eye settings. And that is mainly only to isolate the 4-hour boxes. So our timing windows are still the same, but I want to emphasize to traders the importance of understanding when other time frame traders are triggered into the market, what that can mean to you in terms of knowing when a trader or other time frame traders are trapped, or when they may be in a breakout pullback mode for a continuation. And again, understanding the importance of looking at the chart from the left-hand side and looking to see where the consolidations of volume could be trapped in a quarter level, meaning that if volume tends to accumulate above double zeros, for example, as we head into the next 4-hour block, we've had a 25 pip stop hunt in the London session. They come back inside in the next 4-hour window inside. And this is again, just prior to the US window. So these are 4-hour blocks. So in terms of keeping it super simple, 4, 8, 12, 16, 20, and 0. So those are the window timings on the chart itself. But in terms of New York timing, 915, 915. So again, every 4 hours, New York Eastern Standard Time. Now we still have our normal 12 candle window, 8 to 11 p.m. for Asia, which again, if you understand that timing window, the first New York window will be from 5 p.m. to 9 p.m. New York Eastern Standard Time. 8 to 11 is our 3-hour Asian window, where we talk about the high and the low will typically be set. Now, again, just with not getting too deep into this today, I want you to just understand the importance of every rollover of the 4-hour chart. Now, we talked about that hour prior to the market being a stop hunt or a pre-market hour. And in Asia, that can be slightly different as gold has that missing hour, but I still stick to the same timing window of the 4-hour rotations that all the time frames will move on. And again, that's 9, 1, and 5 New York Eastern Standard Time around the clock, 915, 915, whatever AM, PM, doesn't matter. Every 4 hours, we have a new 4-hour bar. So when we head into the next session, again, especially Asia, we may potentially have 8 hours, 12 hours of volume consolidated within a 25 or 50 pip box, which can set us up for understanding where the stop hunt or the market may move to in order to either disappoint or go against the volume. So for example, if that volume was caught up high, they may go 25 down. If the market is consolidated inside and stays there, they may hit stops and hit stops on the other side. So again, identifying where the trap volume is and understanding that as we head into a new 4-hour block, so each clear and colored block is a 4-hour block. And then our timing window, we can start to see the importance of the beginning and the ends of the 4-hour windows coinciding with our equity market opens. So again, this is a great example on the British pound. Yesterday, we had the 50 roughly 50 pips from high to low, stop hunt from the low of the day to the high of the day, 1 push, 2 pushes, 3 pushes into the close of the US session. We have roughly 12 hours of volume, 8 to 12 hours of volume above peak formations, above the 00 lines, and then a 25 pip stop hunt below. And again, of course, I'll just draw this on here. We're looking at, a block of volume that's got stops underneath of it. So again, the indicators, all of these things will tend to go against what seems rational. And this is why the bulk of majority of retail traders will lose money, because the market doesn't work in that basis. It's about where is the money. So again, if we look at gold, the same scenarios, 4-hour rotations, and this week's been a bit unique in that we've had a very 2-day narrow range initial balance after a very large move down on Friday, 250 pip move down Friday. And again, we're just talking about 15-minute charts, but I can show you a 2-bar entry at the very beginning of the 4-hour chart after stops were hit, 50 pips above the high of the day, but also hitting stops on the previous day's high of the week Asian range, and coming back 250 pips, taking out the low of not only the last 4-hour entry, but the low of the day as well. So understanding the importance of when the 4-hour, in the absence of a daily high or low being triggered, the next most important time frame, well, let's back up. We could start this at the beginning of the month. The beginning of the month, the low of the month, the high of the month are priority areas potentially for institutional large hedge funds. They close their books at the end of the month, they lock in profits, and they start the new month, and they may look to either be reversing off the lows of the previous month, hit the stops, and reverse the market depending on what the setup is. Every situation is unique. We may be in a trending market. We may get a 1, 2, 3 back into the trend before resuming that move. But again, when other time frame traders are triggered into the market, that is the most likely time where we have a highest probability opportunities. And they can be for trend trades, they can be for reversal trades, and again, they can be for a range bound market. So, but sticking just in terms of the Monday to Friday, low of the week, high of the week, have we triggered any weekly levels? The next most important thing I look for is, have we triggered a previous day's high or low? In the absence of that, the first thing I'm looking at is the most recent high and low of the session, the most recent high and low of a 4-hour block, because those are areas where we have consolidated volume. These consolidations, again, have occurred over 4 to 8 hours. When we get these consolidations of volume, we have a large percentage of traders that can potentially either be stopped out against their underlying bias of direction. And again, understanding the high to low area is, how many pips is that? Is that 50? Is it 25? A great example, yesterday, heading into the open of the session, we have an extended range from the US session that moved up in a creeping trend for 50 pips. They hit the high on a 1, 2, 3 at the beginning of the first hour of the second 4-hour block for a 75 pip stop hunt back down to the low of the previous move up off the low of the previous day. So just leaving you with one action task for today. Again, I've reset my colored boxes purely for demonstration purposes. It's more about understanding the high and low of the 4-hour blocks, where they're at, and consolidations. So if you want to reset your colored boxes, the timing windows are still the same in terms of understanding the importance of the equity hour. That middle hour is still the prime area for either reversals, stop hunts, consolidated volume. The same principles apply. We work from the highs and the lows, but those 4-hour blocks, the 915, give us a huge amount of information to sometimes enter early, sometimes be in a very large move before the equity market opens, but also understanding that I'm working from the high and the low. If they have not hit stops and I'm inside, I am going to wait or be trading in the direction of that stop hunt, but giving myself a minimum of 25 pips breathing space between the high or the low if I'm in that move, understanding that I need at least 25, if not more, if I'm shooting through the high or the low. We want to know, is this going to be an explosive move for a trend trade for 25, 50, 75 pips, or is this merely a blow off, as we saw last night, to the high of the day? And then just, again, understanding that the time frame itself is one thing, but when we hit the highs, we trigger potentially not only other 4-hour traders if they're not already in the market. And if they're already in the market and this market is jamming in up high, the first place they're going to go back to is the most recent lows of the current 4-hour bar. But we trigger the high, we get breakout traders in the market, we get other time frame traders in the market, 4-hour, 1 hour now also. So we could be inside for 4 hours, and then boom, they hit the high. They trigger 1-hour traders, they reverse, the next 4-hour candle opens and stays inside of the high, because they've already got 4-hour traders triggered long for the fast, aggressive move back down to the low. Trigger traders back long again, jam them in, and then shift the market, slowly fade back. We get a 1 push, 2 push, 1, 2, 3 into the high of the week, dropping down, consolidating, dropping down in that last 4-hour bar for the fast 75 pip move down, hitting the lows of the week. So action task: mark off your 4-hour boxes and understand the importance of when those 4-hour time zones change and we head into our next 12 candle window. If they're not already triggered in that stop hunt pre-market hour, in that first hour or last hour of that 4-hour window, that you could be potentially now targeting 50, 75 pips, depending on what time frame you're entering. If it's 15-minute, you might be looking at 25 to 50. If you're getting in on a shorter time frame, 50 to 75 pips. So hopefully you got value from today's video, traders. Again, we'll get more in depth as this goes on, but just to keep it simple, starting, just mark off your 4-hour boxes and understand the importance of every time. We're not looking at 4-hour trends or anything else. We're looking at when other time frame traders get triggered into the markets at the highs and lows of the day. Have a great trading session, and may the markets go with you.
Hi traders, it's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, The 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.